Hello, traders. It's 8:01 a.m. Chicago time on the 25th of April, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stands today slight risk off in some areas, on in others. It's again a mixed bag coming in. Yesterday was a completely balanced day in the indices. We saw some interesting divergences among the large U.S. indices. The laggard today is the Dow. On earnings, 3M is down about 3%, and that's weighing in. The Russell's down 4.2 points or 26 basis points. Euro stocks also down, the cable, and so on. Crude is unched on the day, pretty much trading at 65.89 this morning. The S&P is up 1.5 points, and the leader today is the Japanese yen, up 37 pips, followed by the Nasdaq up 25.75. Again, like I said, a mixed bag. So we do this every once in a while, where I ask, where are you from? Where are you listening from? If you can find the YouTube chat box in front of you, I'd appreciate it if you just pop in and say where you're hailing from, what city, what country, and so on. We don't need more specifics than that, but it's interesting to see where you are on the map, just for fun. As far as what's ahead of us today, we did get durable goods about a half hour ago in the U.S., 2.7%, much better than the consensus, and much better than previous. The previous was negative 1.1%. Actual today is 2.7%. Consensus 0.8%. What's on deck? What's left on the calendar? Nada. So we will get EIA natural gas. Or is that for tomorrow? I'm not sure, because there was no holiday. So we should get EIA natural gas. Holy cow, look at those countries. They're popping up from everywhere. Appreciate that. Man, look at that chat. So going forward, there's not much that might impact the auction today in terms of planned releases. Who knows what tweet's going to do what later, but we can kind of set the calendar aside in our planning for this morning. Let's take a look at yesterday's action versus what was expected in our review segment. The main thing that we were looking for yesterday is what is typical of a trend day up, the day after a trend day up. And what's typical of a day after a trend day up is, especially if the point of control finishes near highs, what's typical is a drift either in the overnight session that would take out the trend day high, which in our case would be 29.3975. We ended up yesterday, as you can see there, the overnight high was equivalent to the high a day. And so my expectation was a high probability take of 29.3975, but generally, mainly for the day, expecting a reversion back to balance and for it to hold the VPOC area and go sideways. This is basically what we got yesterday. However, the market failed to take out that 29.3975 by a tick. It pushed up to 39.50 right up here, on a range extension up, which looked really promising. I mean, look at this thing. It had an opening swing between 37 and 33.50. So we opened up at 36. We pushed down to 33.50. We pushed up to 37. We extended the opening swing down. So now I'm targeting that area that you saw on your chart, the 33 and so on. And I talked about the probability that we may end up at 24.25 if we start to sell off. So now I'm interested in looking for, now this is an open auction, so we're backing off of the mid, or are cautious of the mid, looking for an extension down into 24.25. And it looked good for a second. This was not an impulsive move down, this 4.75 point move below the opening swing. And then it pushes back to VWAP inside of the opening swing, and it just gets chopping in there. And then the next thing that happens is we extend the range up. Now, this is a beautiful indication for a long, in line with scenario one. So scenario one starts to come into play. And what are we looking for? Boom. A pullback to mid. There it is on the tick, 29.35. Look for a pullback to mid. We can see that the range, that the rotations are extending for the first time, extending higher, better than lower. Bias is long, even though we're in balance. Now we're looking for a mid long targeting 29.39.75, right? As a high probability play. For those of you who've been around a while, when we have a target at 29.39.75, what is our offer? What is the scale price? I can't wait for your answer because it takes about 15 seconds and that would be a lot of silence. I always front run my exits by 2 ticks. So the fill here would have been 29.39 and a quarter, and it went to 29.39.50, and it failed to actually do its job. Well, it's doing its job. It failed to meet our own expectations of at least one ticking, that 29.39.75 to 40, to do what it normally does. It comes up short at 39.50, rolls over, and as soon as it pushes through the mid, now we know that the trade is probably wrong or is not likely to carry through. And then, so now we're looking for, okay, are we going neutral? In other words, are we going into standby mode, which we do here? We're back into the OS against the open, tangled up in VWAP mid and the point of control at that point of the day. And so we step back. The point of control, these white dotted lines right here, point of control remained steady throughout the session. Look at that point of control. The little white dots just held steady right where they ended up at 29.39.75. And so we have balance. Next thing we know, we have a range extension down and an impulse down. This sets us up for what? A cautious mid short, because again, we're trading a balanced day. The mid becomes more precarious as a level. We're looking for a mid short. It pulls right back up to the OS low, 1 tick short of the mid, rotates down just 2.5 points before it consolidates and then goes sideways again. Okay, and from there, I'll be honest with you, didn't see an edge at all. So I didn't trade any of this yesterday. Yesterday was a pretty wickedly busy day, and because it's after a trend day, I didn't participate in this market. I'm being honest with you and transparent. I did not take this mid long, did not take the mid short or anything, but these are the setups that showed up. I wasn't here for them. So we end up with an okay taper at the top and an okay taper at the low, okay-ish, with a weird profile in the middle that basically describes that the market was mostly in consensus with the point of control we left behind on Tuesday, and we're in balance, okay? And then we come in today, and we have shifted that point of control down. So that was yesterday's play-by-play. Hopefully you are following along. It's important to know what the narrative is. And then we open up, push down, consolidate through the Asian session, and then the Europeans, those Europeans, come in right in here somewhere, 1 a.m. for the treasuries, 2 a.m. Chicago time for indices, and then they sell it. They sell it. They continue to be off this morning. As I said, the Euro Stoxx is is, I think, the laggard of the futures that I watch. And they have an impulse, they have a continuation, they have what looks like a correction that fails, and then we have a bigger continuation down into 29.27. Remember, 29.2475 was the target to the downside yesterday. And then we take this bounce this morning, and the durable goods number gives us a pretty good push as well, and we've taken that back. Where's the market currently? Note in the overnight profile, it's very balanced. This is pretty much a textbook Gaussian or normal distribution with the value area shifted up simply because there's a divot right here where I drew the yellow line. There's a divot right here. And so the way the algorithm works to figure out the value area is it keeps comparing, and that divot is not picked until much later. Or actually, it's never picked. Because this divot, this price, had a lot less volume than any other price until the value area was satisfied. But the important thing to take away from this is the profile shape, completely normal distribution. Point of control is on top of what? The point of control is on top of the mid, VWAP, and yesterday's close, all in the same area, completely imbalanced. The market is basically tested higher, tested lower, and is sitting in the middle before the open. It is likely to be an open auction. As a result, it's likely to be an open auction in range and pretty choppy open this morning. So that brings us to what are we expecting for today, and I need to do that in the next 3 minutes. So let's go to the current market. But because I have something going on today at 4:30 Eastern, I'm going to be on Futures IO talking about the CME micro indices, talking about the opportunities this presents, why the product's important, costs, margins, a trading plan, setting up a trading plan, and all that stuff. I'm going to be talking about that at 4:30 Eastern today. The link is right there. Go to CT Pro and then FIO-Micros-4-2019. This link is also on the TraderByte page on Convergent Trading. You can find that by go to ct.pro/TB, Tom Boy. And then it's also in the description of the YouTube video that you're watching. If you're directly on YouTube, you can click right there and register. I'll be on at 4:30 Eastern today to discuss this. This is an important thing for every trader, especially those who are not proficient yet with the E-minis or trade smaller accounts but still want to continue to trade futures. This is going to be important for you. It's going to help give you an opportunity, in my opinion, to survive your learning curve. Very important to watch. So let's get back to business. Let's talk about what we expect today. So the stock zones between yesterday and today didn't move much. There's a cluster of them here. Let me check where my sigmas are. Okay. And so the primary scenario based on what we have here, yesterday was basically a flagging or resting day. The main scenario that I'm looking at today, it's an open auction. Again, as I said, the reasoning behind this is the complete balance we had overnight. Basically, the market is showing us that it is completely imbalanced. So I expect it to open that way. It is earnings season, and we're seeing the impact of some of these earnings. I prefer a market that moves on earnings under its own power than a market that's moving on central bank moves or geopolitical news. It's a little more orderly and predictable in terms of an auction. Open auction, I'm looking for the market to test down, following in on the weakness that we've had overnight, push to 27, consolidate underneath there, and then come back up and then actually potentially rally. There's a high probability chance of a rally back into the 29.40 area today after resting yesterday. So here's the important thing to take away on scenario 1. If we fall below yesterday's low and then fall back into the range and we see an impulse into the range, that is a clear sign in the narrative of the story of what the market is doing and what the participants are doing. It's a clear indication that we have looked below the low for interest in selling and couldn't find any. This is quite bullish. And so especially if it's an impulse back into the range, if I see that happen, I'll be trading from the long side and I'll be shooting for the point of control, 29.3575, and then following on to 29.40, at least by a tick. We have a weak high or a double top at 29.3975 and 29.3950. I expect that to be taken out. That's the primary scenario. We'll be talking about that tomorrow, why it succeeded, why it failed. The market will show us what it wants to do. The secondary scenario is responsive. Responsive up, takes out the 35.75 overnight high, and then is confronted with some selling, and then consolidates, and then ultimately fails below yesterday's low. If we test up and then later fail below yesterday's low, then this is an indication that the market is not finding the buyers to sustain prices above the point of control. And if it cannot sustain prices above the point of control, then it is likely to rotate down and start looking for buyers by advertising prices lower. In that case, the target is 24.25 or 24.75 area. Okay, that's scenario 2. We're opening in range imbalance. I'm not going to go into 3 and 4. I'll leave it with that. My time is up. Hopefully you gained something. Don't forget, if you haven't done so, tell us where you are. Give us a city and country, and I encourage all of you to go through the list here, this long list of people, and see if someone's nearby and hook up, right? Grab some tea, grab some coffee, grab a beer, whatever, and hook up and talk trading. It's great to connect people. That's what convergent trading is about, and it's nice to see you respond. Take care.